Foreign investors are cashing out of U.S. real estate. In the second quarter, overseas investors in retail spaces and office buildings became net sellers of properties here in the U.S. That's according to a recent report from Real Capital Analytics. But at least one New York-based real estate company seems optimistic about the changing landscape of the market. Here with us now is the CEO of Silverstein Properties, Marty Burger. Marty, thank you for coming down.
Thanks for having me.
So obviously trade war is top of mind with us. What are you seeing with regards to overseas buyers? Are they still buying property in New York and in other high net worth areas, or have they slowed down a bit?
Well, the United States will always be a safe haven for foreign capital, but that capital has definitely decreased its investment, especially in New York City.
What about Chinese buyers? We know that they were a huge part of the real estate market here. Have you seen a substantial pullback in the number of Chinese buyers coming into the U.S. market?
Certainly in the large transactions, you see them still in smaller transactions. They're still buying condos and doing other types of investments, but the larger office buildings and hotels are not Chinese-based investments.
Who is? I mean, are there other foreign buyers who are jumping in if it's not the Chinese?
Well, I think the Europeans have always been investors in the United States. You still have the Middle East investors in the United States, and a lot of that comes to New York.
How do you view China right now? Is it more of a freeze, or are they making longer-term structural changes to how they approach the U.S. property market?
Look, I think the constraints on the capital leaving the country has really has changed what we see in New York as a boom market. And the larger transactions that are very publicized, the firms in China get their hands slapped for doing that.
Let's talk about the larger housing market here in the U.S. because we've seen these lower mortgage rates and they don't seem to be really boosting home purchases. They're still down significantly from the same time last year. What's it going to take to really move the needle in the housing market, you think, right now?
Well, I think in the for sale side, in the condos in New York City, we have a large oversupply right now. And I think that's going to start to tail off as less and less properties are getting built because not everyone is financing them anymore. So it's tougher to get the projects capitalized, and so that inventory will slowly be eaten up. There's still a lot of transactions happening in the market. They're just not as frequent as they used to be.
How has big tech changed the landscape in New York City for developers such as yourself?
Big tech has been huge for New York City. Down at the World Trade Center, we are signing technology companies up every day for new leases, and they are net adding jobs to New York City, which is fantastic. We see a lot of the tech companies, they maybe have 200 or 300 employees, and they say by next year or 2 years from now, they'll have 1,000 to 2,000. And that's a very common theme. We saw that with Spotify, who anchored our 4 World Trade Center building. They started with about 380,000 square feet and now have over 600,000 square feet. But more importantly, the number of employees and net new jobs they're bringing to New York City.
You've really seen the revitalization of downtown after 9/11. Are there any milestones that have been reached, employment milestones or such downtown?
I think the vacancy rate in office has been, very low, despite the fact that we've added a lot of new space between 1, 3, 4, and 7 World Trade Center. I think if you look at Brookfield Place, it's released itself and remade itself, and the whole downtown is just really vibrant. There were about 20,000 people living downtown by around 9/11, and now there are about 75,000 people living downtown. But it's become a 24/7 environment.
All right. Well, that is an amazing number of, I grew up here. I always remember downtown being very much a finance hub, a place that after 5 p.m. was pretty much dark. But now it's really become more of a residential area, you're saying?
Residential, retail, there's bars, there's entertainment, there's culture.
There's also big tech, right?
And big tech.
Big tech.
All right.